Man, so much freaking drama in the past 24 hours, and it was very fitting considering that we just started a brand new weekly candle. However, this week, for the most part, across the board, was met with rejection. Okay, now for those of you who are unaware of the drama, like it wasn't enough that we faced the UST Luna debacle, we faced the whole 3 hours capitulation debacle. Now we have to face the feud between CZ and SBF. For those of you who do not know who CZ is the CEO of the Binance Exchange, and SBF, who's Sam Bankman-Fried, is the CEO of the FTX exchange. Now, just last night, okay, this is what happened. Just last night, CZ comes out with this 4-tweet thread. He goes on to say, due to recent revelations, I'm just going to highlight this for you. Due to recent revelations that have come to light, we have decided to liquidate any remaining FTT on our books. All right, so now just to let you know, FTT, by the way, is the native token of the FTX exchange. Not too long ago, CZ and Binance, basically I'm looking at them as one entity, invested in the FTX exchange. However, last year, they decided to exit from that position. Now, they did exit some $2.1 billion worth of that equity, so they've already taken that out, but they still had some more remaining. So yesterday, he came out to say that whatever is remaining, he is looking to liquidate all of that and basically get that off the book, so exit completely. Okay, so but the comment that piqued everyone's interest and also induced a lot of fear in the market was this one. Our industry is in its nascency, and every time a project publicly fails, it hurts every user and every platform. So now this is what induced the fear, and what happened there was a lot of people trading on the FTX exchange ran for the exit gates. Now, you guys need to understand, if a comment like this came from someone like, I don't know, Do Kwon, people would be like, okay, whatever, you know, what sort of authority do you have to make the statement? I don't think a lot of people would have sort of caved and started a bank run from a statement made by someone like Do Kwon. However, because it was CZ who came out and made this statement, it was pretty freaking big. Human beings often succumb to authority bias even without fact checking. So because it came from CZ, people ran to the exit gates. Now think about the scenario where you are a trader on the FTX exchange and you have open long positions. What happens to you? What's your thought process like? The only thing you're thinking about at this point is, are my funds safe? You know, to hell with the long position, to hell with the profits I have currently on my trade. Your first impulse is to close out your position, okay, essentially take your profits or your losses and get your funds out of the exchange, right? So I want you to picture a scenario where a lot of people closed out their positions only to get their funds out of the exchange. In fact, Sam Bankman-Fried actually goes on to say that, hey, we've already processed billions of dollars of deposits and withdrawals today, and we'll keep going. So yeah, that was a statement of strength. Some of the market's reservations and fears were probably put to rest with that statement, but people were still really confused, and a lot of people started speculating as to what really went down. So it turns out this is the current prevailing speculation on the street. Sam Bankman-Fried's FTX and Alameda merged their VC operations. So we have Alameda Capital and the VC operations at FTX actually went through a merger. All right, so now here's the most popular opinion / speculation of what really went down and why CZ actually came out with that thread. Dylan Leclerc, I'll be posting this thread down below for those of you who want additional context. But he goes on to say, he says, it looks to be highly probable that Alameda / FTX has loans collateralized with FTT, of which they own a vast majority of the free float for. Man, that was a bit of a tongue twister. But so essentially what he's trying to say here is that Alameda and FTX might have loans, and those loans are collateralized with the FTT token. Now, what is the problem with that? The problem with that is the FTX exchange are the ones who actually print the FTT token. Now, when people like us need to go and borrow money from a bank and the bank asks us for collateral, they'll be like, yeah, we'll take your house as collateral. Yeah, we'll take your car. Essentially something of intrinsic value that we have to post as collateral to get that loan. Just in case we default, just in case we don't pay the bank back. The bank would be like, all right, I'll take the house. All right, I'll take the car. Why? Because those two objects have intrinsic value, right? There's value to it. Other people value it. There's always going to be buyers for those sort of assets. Now, what happened here, okay, why this is problematic is their collateral is not a house. It's not a business. No. It's the FTT token. The FTT token that they print. It sounds freaking ridiculous. It is ridiculous. But the FTT token that they print and they hold majority of. So the only majority buyer that values this token is Alameda/FTX. Because in the instance that FTT actually loses value, their creditors are going to call and be like, hey, yeah, listen, we're going to need more collateral, or else what? What, you're going to take the FTT that no one wants to bid up? There's no demand for it. So now what happens with that? That adds more systemic risk because the person who actually lent them money now is also underwater, right? So now that is how it all sort of spreads. So that's why CZ came out saying that, hey, this is shady and I do not want any part of this. So now that is the major speculation on the street. In fact, Alameda Capital has come out saying that, hey, they're going to defend FTT at $22. And so far, actually, they're doing pretty well. They're actually defending it at $22. This is also testament on how they might actually have majority of the FTT token. And because of that, they can actually carry out successful operations in defending $22 as that level. However, now markets do have a habit of sniffing out what comes next, whether Alameda Capital is able to defend that $22 level. So we'll have to see how this plays out. However, the charts is going to be our guiding force here. Okay, so listen to what price action is saying because that is going to give you insight on what the professional traders are doing out there. Always follow the dynamic of buying and selling operations on the chart. That is what's going to paint the picture for you, okay? That's what's going to give you that inside information. So with that, let's get on over to Cardano. All right, so here we have Cardano on the daily time frame. Now, I'm going to give you guys a quick recap on how I manage my trade. As many of you guys know, if you actually watched the previous Cardano video, you guys know that I took a long trade on the test of the 41 cent region. I'm not able to get my arrows in there for some reason. Okay, 41 cents. That's an ugly ass arrow. However, what ensued was price actually not only came down to 41 cents, but fell way below 41 cents and ended up closing at around 40 cents. Now, for those of you who actually followed that entire trade setup, you guys know that I also had an invalidation to that trade, right? Which was, hey, if the daily closes underneath 41 cents, I am wrong on my trade. My thesis here, okay, on the retest of this, was that the bulls would come and defend this region at 41 cents. Right? However, we did not see that. So now based on that, I was invalidated on my trade. I said I'm going to take the loss and I am going to live to fight another day. Because guys, ultimately, it's about protecting your equity. When you build systems for yourselves, those systems are mainly a form of even risk management to keep yourself in check at all times. You should always have a manager self and an executor self if you are someone looking to trade actively. Let the manager handle the thesis behind your trade. Let the executor follow the rules that the manager set. Now, where did I get out on my trade at? For that, I'm going to go ahead and pull up the Ichimoku cloud. Okay. Now, I got out earlier today. I got out on the retest of the 10 simple moving average. What I noticed over here is how price lost the 10 simple moving average to the downside. So I said, hey, you know what? This looks a bit weak. We barely saw a shadow on that candle on that daily close. Usually a shadow will essentially tell you that, hey, a lot of buyers came in to bid that candle up. We did not even see that. So I looked at that as technical weakness and I decided to exit my position on the test of the 10 simple moving average. All right, so I did take a loss of around 2.5% on that trade. So now the next question is, okay, you said that you're going to live to fight another day. When is the next day? What is the next trade proposition? Well, the next trade, guys, honestly, keep it simple, stupid. It's the same thing. It's the same thing. You need to understand that my most successful trade of the year was the Luna trade, right? I actually shorted Luna at around $84. What you guys need to know is that I attempted that trade 3 times before I was actually successful on that trade. I actually took a loss the first 2 times trading the same setup. All right, so I attempted it once, lost. Twice, lost. However, on the 3rd time, it worked. Right, because I identified a key region of support that broke, right? So once again, I have identified a key region here, the key region being 41 cents. For those of you who are just about joining my Cardano analysis, how did I get that 41 cent region as a key region? Well, if I just zoom out of my chart, I want you guys to notice price action on the 41 cent region. Okay, the 41 cent region, by the way, guys, is that white horizontal line on my chart. Every test of 41 cents was met with a defense by the bulls. Okay, right here, this was from May all the way up until October. Okay, every test of 41 cents, defense. Test right here, defense. Test right here, defense. Right here, defense. So not a single candle close underneath 41 cents for months on end, despite multiple retests. The one time we lost it right here, which was on October 10th, we saw a swift sell-off to the downside, taking Cardano all the way down to 33 cents. So what I noticed here, I said that, hey, you know what, this once again is going to be a massive region of contention. There's going to be a fight between the bulls and the bears, but based on historic price action, I'm saying that the bulls are likely going to come and defend 41 cents as a region of support. Right, that was my primary thesis. However, I got invalidated on that. But that does not necessarily mean that the bulls lose the edge on that level. So once again, I will be trying for that trade if it is presented to me in the future. Okay, for now, I do believe that Cardano is in the middle of the range. So honestly, for me, I'm saying that this is a no trade zone until I get a bit more clarity on price action. That is still going to be my trade setup to the upside, 41 cents, 2 consecutive closes, and I'll be taking the trade on the retest. Keep it simple, stupid. Now, there is another trade opportunity. However, that trade opportunity will come to us if Cardano actually takes that plunge down to visit 38 cents on the Tenkin. However, this is going to be a bit tricky, so I want you guys to listen up if you are someone actually gunning for this trade. So now the trade set up on the Tenkin is for me to bid the retest of the Tenkin. Now, why is that Tenkin important? Because now what I'm about to bring to your attention is the confluence on that 38 cent region, okay? Now, the Tenkin comes in at around 38 cents. However, if I take you guys on over to the 12-hour time frame, you'll notice that 38 cents also lines up with the 12-hour Kijun. All right, so now here, what I'm trying to depict to you guys is the confluence on this 38 cent region. Okay, so this is the 12-hour Kijun. This is the daily Tenkin. Okay, how about the 2-day? This is the 2-day Tenkin. Okay, how about the 3-day? This is the 3-day 10 simple moving average. How about the 4-day? This is nothing on the 4-day, but okay, no problem. We have 12-hour, daily, 2-day, and 3-day. I think that's good enough for me for a high level of confluence right there. But the complexity in that trade comes in on that, hey, this is going to be a conditional trade. And what do I mean by that? I will only be taking this trade if price defends this wick low right here. Okay, now why is that? Because if I just go ahead, turn off my Ichimoku cloud, I want you to notice the entire structure of this. So far, since Cardano's bottom right here at 33 cents, we've been putting a series of higher lows. So we had one low right here, higher low, higher low. This was a higher low, and so far we're maintaining the higher low structure. This trend is still intact, and for me to take a long position here, I want to see price hold this wick as support. Okay, so maximum price comes here, we get that bounce, and then continuation to the upside. All right, so I will be keeping a very, very keen eye out on how price reacts off of this region. More often than not, you're going to get the tell on the lower time frames. So for as long as the bulls actually maintain the daily uptrend, I think that they can still take this up from here further and win the battle on that 41, 42 cent region. In the last video, I actually highlighted a point of reversal for you guys that can be found if you put on your Mango Dynamic indicator. For those of you who do not have access to the Mango Dynamic, I'll be giving you the level that I have on my chart right now. Okay, the current Mango Dynamic resistance comes in at around 44 cents. If you guys want to go ahead and mark it out on your charts, go ahead and do so. Okay, I'll be bringing up this level on all Cardano videos that I do in the future, but 44 cents right now is where it's sitting at. Okay, now why is this level important? Because if I zoom out on my picture, I want you to notice the last time price actually lived over that region was only here, October of 2021. So this is a multi-year point of resistance that we're looking at. Every attempt at taking out the dynamic level was met with resistance by the bears. All right, there was a major sell-off on every attempt, every test of the dynamic. Now we're testing it again. However, we're seeing a squeeze into that region. Okay, especially if you're looking at the levels on the daily time frame, we can see that price is heading into this equilibrium mode. All right, if we just turn on our moving averages, we can look at the squeeze there. Right, look at the squeeze between the 10 SMA, the 21 EMA, and the 55. It's all one big sandwich, so we can see price and the moving averages come into equilibrium. Usually, price action like this leads to the next breakout move. Alrighty, so I want you guys to have your eyes peeled on the bigger picture at all times, because ultimately, guys, if on the 4-day time frame, let's go ahead and put on the Mango Dynamic once again. If price takes that level out Again, that would then be the next sign of potential market reversal. I'm talking about the macro market at this point, essentially from a bear market getting into a bull market. All right, the cycle starts anew. Okay, so keep your eyes on the prize. Now, I hope you guys enjoyed this video. If you did, don't forget to smash that like button. It goes a long way for the channel. And hey, if you enjoyed today's mango juice, go ahead and subscribe to the channel if you haven't already done so. And I will see you guys in the next update. With this, trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, you guys.